I'm Vitus Rotzer. I'm running the financial messaging practice or product line within Bottomline. And I have the pleasure today to welcome Yulia Baynham and Manit Mehra to participate to this discussion and to bring us their expertise. Maybe you would like to say one word about you, Yulia?
Hope mic's working. Hi, I'm Yulia Baynham, PwC. I am director in our payments practice, and I deliver large-scale payments modernization transformation projects with clients. Came across regulation, of course, every time we do support client work, and I also represent my firm at all industry forums in the UK. Thank you.
Thank you. Manit?
Hi all, I'm Manit Mehra. I'm a managing director in Accenture Financial Services. Been in financial services for 24 years, and I lead our regulatory business and payments modernization for various clients in UK and Ireland.
Good. Thank you for joining us. And I'm sure we are excited by your insight within this topic. So at Bottomline, we are running a survey every year about the future of competitive advantage in banking and financial institutions. And one of the most outcome that surprises us was that 90%, 91% to be precise, of financial institutions that have responded to the survey said they are not going to, or it will be challenging or very challenging to be ready in the next 12 months with all the regulatory mandated that we have. So I think this is setting up the scene quite well. And my first question to you two, and maybe starting with Yulia, is how is the payment, or how the payment regulation changed over the last few years, and how do you see it evolving in the coming years?
Well, first of all, the statistics are quite worrying. It's 90% are concerned about upcoming regulation, or that means the industry has been overwhelmed and fatigued by regulation. It's not going to be new news to anybody here that is true. But I like to be a good cop in here. I'm not going to defend it, but I'd like to say throughout the course of the session about how regulation can become more a friend than a foe. And we can discover that later. But if I look at the last few years, of course, we saw development of APIs. We've got ISO standard that everybody's been busy with, RTGS in the UK. And clearly the trend is to see how regulation can support innovation, and that's what we're going to see going forward. If I look at the specific, probably a few trends that are coming up, just to answer the question. One, we see more cross-border alignment between the regulators and compliance, and the geographies are learning from each other on the best. If the regulation is developed well, can they learn from another one, and maybe they connect regulatory developments together. Second, you will see the digital assets, of course, as a hot topic, stable coins, tokenization, regulation over AI. I just been to another session downstairs on AI, and that was a big debate, but it needs to be regulated and all. That's also upcoming. But I think another quite topical point would be about operational resilience and cyber. That's not going to go away. With the legacy infrastructures, putting new things on cloud, we'll see that potentially there will be a large risk of outages that industry needs to be prepared for, and the regulators are mandating more and more resilience embedded in the company's compliance and regulatory oversight.
Thank you, Yulia.
Over to Manit.
Manit?
Yeah, I think similar to Yulia, the way I look at it is regulation needs to have a fine balance. I think it's important, but you shouldn't overdo it as well. Even in UK, there was a national payments vision that came up, and it said if you do too much of regulation, it might stop innovation. But at the same time, I think it's important because it fosters competition and innovation as well. Now, just to add to what Yulia said, there is regulation in every type of payments, right? So if you look at high-value payments and RTGS and cross-border, there's been a drive since 2020 to move to ISO 20 or 22. And the large markets have all moved. So with Target 2 and Euro 1 in Europe moving in to ISO in 23, we had UK moving in June 23 as well, and now the Fed wire in the US moving to that as well. And that won't stop. When ISO will keep happening. In the low value payments, you've got instant payments happening for SEPA instant payments happening in Europe. In fact, 9th of October 2025, that's when they mandate and everyone has to send. I would say APIs has been a bit slow on what I've seen in Europe and UK based on after PSD2 happened and what open banking happened. It hasn't really kicked off in the way it has to. So that's been a bit slow apart from variable recurring payments. Stable coins is just starting on the regulation with Mika happening. And then at least in the UK, there's a big drive to upgrade the faster payments infrastructure. Faster payments started with UK in 2008, but it's been left behind with the new payments architecture. But now with the national payments vision and the Bank of England taking a view on it, so that's going to happen. If I look at the future, as I said, faster payments is one that's coming. ISO won't go away. I don't know if people know the hybrid addresses, which is mandating the town and the country for every high value payment and SWIFT payment that you do is going to be mandated. Well, not mandated, but coming in from November 25. But I don't know if you know this. From November 26, if you are making a payment cross border or SWIFT, if you don't have an hybrid address, it's not going to be allowed. The schema will just not allow it. So you need to have town and country there. So ISO will keep happening. Structured remittance are going to be mandated at some point. So high value, low value, AI, Gen AI with the involvement of agents and agentic AI. As Yulia said, there will be some regulation because otherwise you don't want to be fully loose. It's got really good advantages, but you need to have some kind of regulation for agentic AI and AI, as well as for stable coins, tokenized deposits. There'll be central bank digital currency as well. So a lot happening in the next 5 years in regulation.
So I think we are not going to get bored in this domain for the next more than 12 months. I think just to add up on that, I will say also that it depends on where you are. Definitely the regulation is a bit different. UK is a bit ahead with confirmation of pay. Now we have in Europe VOP, which is coming, so all the pre-validation that can be also added to what you said. And with the rise of instant payment comes also more fraud, which is not really a regulation, but it's a must as well to apply. So a lot on the plate. And when you mention ISO, I strongly believe we are just starting the journey, actually. And most of the banks have taken that as a tick-the-box exercise and be technically ready, but they still need to leverage this now. And the address, structure of the address is one example that will come very soon, but there is much more to be done, effectively.
Just want to make a couple of points about the UK. Of course, the UK is seen as, I would say, maybe a blueprint for regulation, but we got to the point where it was too complex, very confusing, 3 regulators, and now through the national payment vision, the regulatory landscape is being simplified.
Yeah.
So we'll see that. But I get through my client work, I can see that a lot of queries from other geographies about how do you do it in the UK, and how can we learn from the UK but do our own thing in our geography. And particularly a few years ago, we were running a future-ready payments report for the industry with UK Finance, and at that point, I ran a survey around APP fraud, which is also guidelines came into UK last year, and looks being like successful regulation. But at that point, the whole globe came back to me and said, "We're watching what UK is doing." But there are other regulators who are, also placed really well. In Singapore, for example, Singapore regulator.
I think the UK has lead the pay for many things. Co-op is one, but faster payment came
That's right.
much more early than the others.